Hi, I'm Katie Case,
And I'm Joshua Case.
and we are the owners of American Tax Service in Franklin, Indiana. And we have decided to make a couple of videos to help people with filing their taxes this season. So some of the questions that we get have to do with the standard deduction. So Josh, tell us what the standard deduction is.
The standard deduction is a set amount offered by the federal government to reduce your taxable income. It changes every year. It never goes down historically, it only goes up incrementally.
Okay, so if you decide to take the standard deduction on your taxes, a married couple filing jointly can take a deduction of $27,700. If you are single or filing married separate, you can take a standard deduction of $13,850. Josh, why would a married couple want to file separately instead of jointly?
There are rare circumstances when it is in your benefit to file separately as a married couple. A couple of those would be one, if you just aren't getting along and you do not want to file a tax return together, it won't give you a tax benefit, but it'll keep your documents separate. Two, if combining both incomes together pushes you into a higher tax bracket, it could be of a benefit to you to file separately and keep both of you in the smaller tax brackets. Though your standard deduction does decrease as a result of married filing separately, it could result in a larger um, refund or smaller tax liability as a result of staying in the smaller tax bracket. Another reason you could file married filing separately would be to, sorry about the but would be if the one spouse qualified for certain credits alone, but not when you file joint. So if you want to be able to claim those credits, then married filing separately would open up the door to that one spouse to claim those credits.
Perfect. If you are filing as head of household, your standard deduction is going to be 20,800. Head of household. What does that mean, Josh? What is the head of household?
Head of household is a single parent or single guardian. You should will have a kid, at least one in the home, and it allows you to uh, gain that higher tax deduction, that higher standard deduction. If you are single with children, you should be looking at claiming head of household.
Now, if we have a husband and wife that are divorced and they have children, can they take turns rotating head of household
The,
from year to year?
the answer to that depends on where the child lives. The head of household has to maintain the children in their home for more than 6 months. If you are the non custodial parent, meaning the children live with the other parent full time, and you get to claim the child every other year, but the children do not live with you, then you cannot claim head of household.
Okay, so a few other ones we have are if you are over 65 or if you are blind and you are single or head of household, you get an extra $1,750. If you're married and filing jointly or separately, still over 65 or blind, you can get an extra $1,400. Please follow us for more videos and make sure you like us on Facebook and Instagram. We are gonna have more videos about some of those child tax credits and donations. We get lots of questions about how much can I claim for donations, as well as those medical questions. How much can I claim for medical? So, American Tax Credit, American Tax Service in Franklin, Indiana. Stay with us for more videos about your tax questions.